Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, Friday was the first trading day of October and the market gave us an oversold bounce. But that downward Elliott Wave Corrective Zig-Zag that we identified in last week's recording remains qualified. And that was led by the fact that interest rates and the dollar both surged higher during the week. And Bitcoin has broken back to the upside. Is this the start of a new impulse? Let's take a look at the charts. At the time of this recording, it is very early on Sunday morning, so the futures market is closed. Before we get to the charts, just a quick reminder, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these recordings is posted. Thanks, we appreciate it. Alright, as I said in the intro, this downward zigzag that we talked about in last week's recording remains qualified. In fact, it's spot on so far. You can take a look at the bounce that we got on Friday, and I also mentioned them in the intro that it was the first trading day of the month. That's when institutions, mutual funds, etc. put new money to work, money that people are putting away every single month in their dollar cost averaging, IRA, 401k, retirement plans, things like that. And so that's a good day for an up day in the market. And the fact that we were getting oversold, you can see that on the low of the day, we did take out the low of Thursday before the market started rallying into the close. And we also had Merck come out with that pill that's supposed to be very helpful for those that are unvaccinated, fighting off the effects of the virus. And then we had interest rates, as you'll see when we get to the chart, back off a little bit. So kind of a perfect storm for the market to bounce back to the upside. But look at the bounce. On the bounce higher, we didn't even make it back to the 10-day moving average, or got very close. So Friday was nothing more than an overdue, oversold bounce, and we still have that potential C-wave extension down to the 100% level right at 420. See how the beginning of the week starts. Also talked about the dollar. Had a surge to the upside. Really surprised to see this big of a move to the upside, breaking that old wave 3 high and the high that was set back in August. Just vertical move. Came back a little bit there on Friday as well, but note again, overbought. Too far away from the 10-day moving average. You know the phrase, no security in any time frame is very far away from the 10-day moving average, so the dollar gotten overbought on this big vertical move, so it came back a little bit. And then we take a look at interest rates, which had surged higher. Now, I thought we might pause after the move higher in last week's recording, but we continued to the upside, and I was really surprised to see us break this resistance area that I thought might hold right around 15. So we broke above it, consolidated. Now, we did break down below that on Friday, which that's interesting. We'll see how that plays out in the beginning of the week as well. But look, all we did was tap the 10-day moving average on the low on interest rates. But again, a perfect storm for that market to bounce to the upside on Friday. Now, in last week's recording, we talked about some inflation data, the CPI, the PPI, etc. Well, the Federal Reserve has an indicator that they like to watch called the PCE. That stands for Personal Consumption Expenditures Price Index. To me, this is just like when somebody takes an indicator or something that is very common and gives it a different name. So people are like, oh, what's that? And it makes you seem like, oh, you know something that they don't. They want to know about it. It's just another inflation gauge. But look, even that hit a 30-year high. And so it rose 3.6% in August. They said the greatest jump in that indicator in over 30 years. So the Federal Reserve can't get away from the fact that there's inflation out there, and so far it's not been as transitory as they thought. And we'll see what the future holds, but they're already surprised that it stayed this high this long. Now, with gold, you would think, okay, the dollar went up and interest rates went up, so gold should go down, right? We talked about that last week as well. No, actually, gold caught a bid at the end of the week. Now, was this just an oversold bounce as well on gold? Maybe, but it was able to recover the 10-day moving average, but it is back at some pretty important resistance right there at 165 on the GLD. So perhaps that's the end of that, and then we start to head back down. But again, I think a lot of that depends on other avenues moving around the market. Look at Bitcoin. big jump to the upside. So we completed that downward zigzag and we consolidated right there at 40,000, which was a pretty logical place to find support. And then a big impulse move to the upside. At the time of this recording on the live chart, it's dropped back a touch, but not much from this level, trading at 47 and change at the time of this recording. So far, this big surge to the upside is holding. So are we starting a new impulse to the upside? Perhaps. We get that 10-day to cross above the 30, which the 10-day is the lime green line, and the 30-day is that fuchsia colored line. Then we could be looking for a move back to the upside up near those all-time highs with Bitcoin, but no doubt that was a pretty significant move back to the upside. Also introduced or talked about the SMH in last week's recording and this trend line, that if we lost that trend line, if we lost the SMH, then the market could be in trouble. Well, we did, so I thought I should highlight that and show you that we did break that trend line, and we'll see if the market can recover that. We've gotten a little bit oversold there as well. You can see on the low here, and really we didn't recover as much on the SMH as we did on the market itself. Still some separation, still technically a little bit oversold. We'd also introduced the Nifty. Coverage of the Nifty in last week's recording. Talked about how maybe that needed to pause a little bit, and pause it did, but above support. Still a really good looking chart, and one of the best looking charts in the international markets, in my opinion. As long as it holds that 49 level and has the potential to move back to the upside, you can see that it was able on Friday to cross back above the 10-day moving average, so that was significant as well. Still some pretty good separation between the 10-day and the 50-day moving averages, so have to keep an eye on that as it is in slightly overbought condition. And then when we look at the DMI, it looks like the strength that it was showing is starting to wane as the ADX dips down. Now, the positive directional indicator is still on top, so the buying pressure is still leading the selling pressure, but not by a whole lot. So 49 is a very key level to hold there on the Nifty. And then last but not least, looking at the VIX, can see that, man, we've consolidated in this area. So we broke out of that descending triangle. We talked about that last week, and now we've broken above 20. And with this consolidation, it makes you think, wow, wouldn't that be fun for the markets if the VIX started to create a new base above 20? So where 20 was support, like 16 has been. Now, I'm just kind of joking around. I don't think that's going to happen. I think this is temporary. This consolidation right here is temporary. But, man, that would be something to have that kind of volatility moving towards the end of the year. And we're going to start to see that seasonally positive time of the year in the not-too-distant future as we start to approach Black Friday, etc. But that's a ways off. And we could still fulfill this downward zigzag in the SPY before we start to talk about the holiday season. Hope you've had a great weekend. Look forward to talking again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.